Hey folks, Dan Frio here, the rate update. Today is October 13th, 2021. Remember the days when the Fed said they weren't going to raise rates or do anything until 2023? That's getting debunked today, guys. So don't go away. We'll be right back. Here's the headlines that was posted. This one was, let's see, I don't know, a while ago. This says 2 minutes ago, two minimum reds or whatever. So this was, November 23 of 2020. Fed Evans sees no rate hikes until 2023, maybe 2024. And then right after that, and you feel free to go back to my videos from January and February and March of this year. I'm like, guys, we don't know what's going to happen tomorrow. How can we say that rates aren't going to increase until 2023 or 2024? And I said, it ain't going to happen. As soon as we start seeing inflation raise its ugly head and jobs come back, they're going to start popping rates. Okay, so that's what I want to kind of debunk today. This is why I shoot you straight. I don't sugarcoat anything. I just give you the facts behind things and show you behind the scenes where I'm getting all of my data. Okay, so listen to this report from the one of the Federal Reserve vice chairs today, and then we'll be right back.
Taper timeline today. In a virtual speech, Clarida is saying substantial further progress conditions have, quote, all been met. Joining us now for an exclusive interview is St. Louis Fed President James Bullard. Great to have you back on the show, President Bullard. Welcome.
Great to be here. Thanks for having me.
So is this a go, taper at the next meeting in November, an announcement, a vote, and getting ready to scale back that stimulus in your mind?
I'd support starting the taper in November. As you know, I've been advocating trying to get finished with the taper process even by the end of the first quarter next year, because I want to be in position to react to possible upside risk to inflation next year as we try to move out of this pandemic.
What happens if growth slows and the market continues to weaken here? Will that change your view on how fast to taper and how fast to look toward rate hikes?
You know, third quarter growth does, it's been marked down, as you know, following everybody, I think, including the Fed, including me. But I've just pushed out the growth into the fourth quarter and into the first half of next year. So I think the total amount of growth that we'll see will not be diminished. There's still plenty of demand out there. There's plenty of reopening that still has to occur. There's plenty of fiscal support for the economy and monetary support. So I really think that we're still in great shape. I think the pandemic will come under better and better control. We've got technology still going on the pandemic front, pills are on the horizon, booster shots, shots for kids, all kinds of stuff happening. So I think we're still in great shape economy-wise, even though we got a setback from the Delta variant in the third quarter.
Okay, so he's even saying that he was a proponent of raising rates at the last few meetings that the Federal Reserve had. But here's my projection, and I've been consistent with this. We're not going to see anything until probably November, December, maybe January. But here's what I see: the next Fed meeting that comes up, they're going to say, okay, here's the plan or the layout for tapering. Okay, so what does tapering mean? This looks a little hot, so I'm sorry that videos or audio, my lighting is a little bit hot. Tapering means this, and I'm sorry to repeat myself, but we're getting a lot of new subscribers. What happened was mortgage rates are determined by what's called a mortgage-backed security. It's a bond that trades on Wall Street. So as people buy more of that bond, they drive up the price of the bond because competitiveness is like anything else right now. Gas prices are going up because a lot of people are buying gas. Hotels are going up because a lot of people are going to hotels. So it's supply demand. So the Fed's stepping in and purchasing over $40 billion of mortgage-backed securities a month. Okay, that drives up the prices, and when the price of a bond goes up, it drives down the yields. Okay, so they've been doing that for the past year, probably a year and a half. And when they talk of tapering, it means that they're going to purchase less and less and less each month. Okay, so that's what's going to transpire. Now, my assumption is going to be at the next meeting, they're going to announce what their plan is. So we've seen a huge deterioration in the prices of mortgage-backed securities lately, pushing up the yields. And I always say we trade on the rumor because once it's actually full-fledged news, it's already baked into the equation. So let's go in and see where mortgage rates, what they've done over the last, let's just say since they announced a lot of this information. Okay, so let's go to here, and I have a new chart for you guys today, and I'm actually sharing it, my daily rates, in the description down below. You can see from this chart, back right about here is when everything started to compile, meaning we had the chances of the government defaulting on all their debt, and I said, don't listen to that. It's just bunch of PR news, and they're going to make themselves try to look as good as they can to get voted in next time. And then we heard inflation and all this other stuff. We heard the same information right here about basically tapering and inflation, but through here, basically they came out and said, yeah, we're most likely going to announce it at the next meeting. Okay, and it's crushed from there. Okay, so that being said, here's how this is going to lay out, and I can almost assure you, the next Fed meeting, they're going to say, you know what, inflation it's hot, and we got some inflation numbers today, but it's hot. People are going back to work, and there's a lot of job openings. Let's start there. The JOLT index came out the other day, and there's almost 11 million job openings. Okay, so there's 7 or 8 million people looking for jobs. So you have this many job openings, this many people looking for jobs, you can easily fill that gap. Now you're going to say down below, well, Dan, this is unskilled labor, this is skilled labor, this is about shots and whatever. I still am a proponent of saying a lot of it stemmed from the excess unemployment benefits that were paid out there. Also, behind the scenes, there's a lot of parents or moms or dads or whomever that can't go to work because they have to stay home with their kid. So can they work remotely? Is their job allowing them to work remotely? Now what we have is potentially a lot of people losing their jobs because they're not looking, or they don't want to get vaccinated, not going down that path. But there's going to be a lot of people probably losing their job, a lot of lawsuits, a lot of stuff that's probably going to make its way to the Supreme Court. How that's going to rule out, I don't know. But those are the things behind the scenes that's doing this. All right. So based on all that information, let's see what inflation's doing right now. So today, the consumer price index came out. The Federal Reserve really doesn't, they give this some credence, but they really focus on the PPI, the producer price index. So let's just go and see what happened to the consumer price index month after month X. So they pull out food and energy, then year over year, and then X food and energy year over year. Consumer price index, the last month was up 0.3 month over month. Okay, consensus for this month was 0.3. We came in 0.4, a little bit hotter than expected. X food and energy, last month was 0.1. Consensus was 0.2. We came out at 0.2. Okay, consumer price index year over year. Last month it was 5.3. The consensus was 5.3. We came in a little bit hotter at 5.4. You strip out food and energy. Where does that fit us? Last month 4, consensus 4, actual 4. Okay, so let's just break it down to this piece, this number right here. The yearly consumer price index or inflation rate per this indicator is 5.4%. All right, the Fed's target rate is 2, maybe 2.5. But they've come out and said, you know, we really don't care about inflation. Back then, they wanted full employment. So they said, we're going to wait until there's at least 1 million people hired for at least probably 2 or 3 consecutive months. You know, you got to take that with a grain of salt too, because you have to put on the brakes to this economy eventually. Okay, so again, when they said that they're going to probably taper, which we took that as they're going to taper probably in the next couple of months, or at least announce it, set it in stone, the market's deteriorated from then. So let's get on to some other news to back this up. The consumer prices rose more than expected as energy costs soar. Okay, there's a huge energy glut right now, or not glut, deficiency because of a lot of logistics, meaning ships and trucks and everything getting things from one place to another. That's a complete blockchain right now, or a block up of getting things to different places. Okay, you can see the same thing in the auto industry. There's no used car sales really out there right now. Car prices are out of the roof. I have relatives in the car business. They're like, there's no new cars, really not enough new cars being built. Very similar to the housing market. We don't have the chips and the other things to produce the cars. So what's happening is people are holding on to their cars. Even after a lease is up, there's nothing new to buy, so they just buy their lease. So there's really not a lot of new inventory coming in the market, and there's not a lot of old inventory coming back to the used car market because people need a car and there's just nothing else to buy. So you can see supply demand. The same thing as the housing market, but cars don't make the headlines like the housing market does because that's a little bit more clicky baity or more sexy news, I guess I want to say. But car prices, look at those. Those are probably far exceeding what home prices are doing right now. Okay, so the next thing is what we just heard from is Fed's Bullard on the bond purchasing tapering. You see, should be tapering quickly in case rates hikes are needed. And we just heard from Mr. Bullard on that front. Okay, so now let's get on to what's all this news that's compiled in today. How's it affecting the markets? Well, we're going to go to here, and this is why people follow me on a daily basis. What are mortgage rates doing? Well, how do I watch that? You can be like, okay, what's my stock doing? Well, most likely you can watch this Dow Jones or the NASDAQ or whatever to figure out what that's doing. But this is actually tagged to the mortgage-backed security, which is a bond that trades on Wall Street. It's the biggest component of your mortgage rate. Okay, so here's what's going on with that. We're up 9 right now. And as I said earlier, when this price goes up, yields or mortgage rates come down. All right, so this is what's happening right now. We went over the economic news, so how is that affecting us today? Well, it's kind of a wild ride, but I'll take it. Remember yesterday we closed the day on green candlesticks. We opened the day on green candlesticks, but we plummeted right out of the gate. I think that was a fear of the inflation numbers that came out. And then they came back and said, okay, it is what it is. We know what's going to happen. The uncertainty's coming out of the market. The Fed's going to make a move here to tapering, and we've upticked from there. Uncertainty is a big fear in the market. Once you know the certainty behind things, then you can actually, trade off of that, or the direction things are taking place. All right, so now let's get on the rates for the day. I have a new newsletter that I have, and you can, down in the description below, you can click there and subscribe. This gives us the rates per day. All right, so everybody asked for 15-year rates and so forth. So I had to dump VA rates, so I apologize about that. But here's what we have right now. Today's rate on a 30-year conforming loan is 3.2. It's saying right now, yesterday is 3.17. Today is 3.2. This gives us a better indicator what the move was for the day. 15 years, 2.6 right now. Yesterday was 2.54. You can see this is that delta we used to talk about. So the change is 3 basis points, which equates out to that number right there, okay? 6 basis points, so you get it. When I say it's up or down 6 basis points, this is where that change is. And a basis point is, again, 3 basis points is 0.03, all right? 15 years, 2.6. Yesterday was 2.54. The FHA is 2.85. Basically, our FHAs mirror our VAs. Okay, so this is probably in essence right where I am with my VA rates. Okay, but this is the national average that you can catch daily, and you can sign up for this newsletter so you can get it as well. Jumbo's 3.15. Yesterday was 3.13, and the 5-year ARM is 2.8 versus 2.85. All right, so that's the data there. I'm going to start posting this on a daily basis. We'll go through some of these news headlines as we progress through, but I want to leave it at that for today because the news is out. The markets are reacting okay with things. We're still up 9, and that is it for right now. So guys, we have a new feature. We will be reviewing your loan estimates. Okay, we have a separate email that goes through. What I have is make sure those get received. So if you're in the process of a mortgage right now, send me your loan estimate. Okay, what we're looking to do is I'm looking to review it for you. It might waste 5 minutes of your time, but it might be well worth your your weight. Send me your loan estimate. If you're in the mortgage process right now, your lender has to send you a loan estimate within 3 days of pulling your credit. It's going to give us your loan amount, your information of your address and so forth. It doesn't give me your credit score, your social security numbers or things like that. It basically gives me all the details of your loan. What I'll do is I'll review it and write all over the thing and say, okay, here's where you're at. Here's what I can do. Let's see if we can save you some money on costs. Let's see if we can save you some money on the rate. Let's see if we can save you on both. Okay. I'll be honest with you. Sometimes I can't beat what you have, or I can't even match what you have. I'll write right on there, God bless you. You did a great job. Take it and run. Don't look back because you got a great deal. So how do you find more about me and my team? Great question. Go to therateupdate.com. You're going to go over here and call us, 844-775-LOAN, or you can apply right online right here. Or you can schedule a call. This is what most people are doing. They're scheduling a call so they can meet with us one-on-one. You can send us your loan estimate. We can even go over it with you on Zoom. So how you do that, you just click that, choose a day and time at your convenience. I would highly suggest that we do this via Zoom so we can look at your information, your loan estimate, and review that with you right on the phone or right on Zoom. So the review email is down below in the description, as well as the new newsletter, so you guys can get a mortgage daily update newsletter to figure out where rates are going and where they're heading. So that's it for today, guys. God bless. Thank you so much for watching. Don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you later. Bye-bye.